Nvidia just got hit with two completely opposite headlines in the same week. On the bullish side, there's a $1 billion AI partnership with Eli Lilly. On the risk side, there's fresh US-China export drama that could keep this stock volatile. So hit subscribe and stay tuned, because I'm going to break down both. And at the end, I'll lay out a clean, scenario-based price outlook for NVDA over the next 8 to 12 weeks. No hype, just what would actually need to happen in each case. Quick disclaimer before we begin. This is not financial advice. Please do your own research and never invest money you can't afford to lose. As of the latest price print, Nvidia is trading around $186 per share. And the reason NVDA is still a magnet is simple. It sits right at the intersection of AI demand, geopolitics, and earnings expectations. Any one of those can move the stock fast. Story 1. The bullish catalyst. $1 billion AI deal with Eli Lilly. Let's start with the bullish headline. Nvidia and Eli Lilly announced they'll spend $1 billion over 5 years on a joint research lab in the Bay Area. The focus is using AI to speed up drug discovery and development. And this matters because it pushes the story beyond Nvidia is just chips. It supports the bigger narrative that Nvidia is becoming more of a platform company. Chips, software, and AI tools that plug directly into industries with massive budgets, like healthcare. Reuters also noted pharma is doubling down on AI to cut timelines and costs, and Nvidia is positioning itself right in the middle of that shift. So the takeaway is straightforward. This is a demand expansion story. The AI build-out isn't only data centers, it's also labs, automation, and real-world enterprise use. Story 2. The risk catalyst. H200 exports to China. Now to the risk side, and this is where it starts to feel like a plot twist. The US approved Nvidia's H200 chip exports to China, but with conditions, including third-party testing and restrictions around volumes and use. Then Reuters reported that Chinese customs agents were told H200 chips are not permitted entry, and suppliers halted output after that development, based on the Financial Times report Reuters cited. So from the outside, it reads like this. Washington says, allowed. Beijing says, not so fast. Here's why it matters. The H200 isn't Nvidia's newest flagship. Nvidia's more advanced line includes Blackwell and its upcoming RUBIN platform. But the H200 is still a major, high-demand AI chip. And any uncertainty around shipments, approvals, or customs enforcement can quickly turn into short-term questions about revenue timing and headline-driven volatility. It's also worth noting Nvidia publicly clarified it does not require upfront payment for H200 chips, pushing back on reports about strict payment terms. That alone tells you how sensitive this China lane is right now. Story 3. The long game, RUBIN and CES. Zooming out, Nvidia is trying to keep the market focused on what's next. At CES, Nvidia highlighted its RUBIN platform and a broader blueprint across AI infrastructure and industry models. For investors, this matters because the bull case is still fundamentally built on 3 things. 1. New chip cycles. 2. More software and platform lock-in. 3. Customers planning multi-year AI build-outs. Reuters also reported Nvidia discussing massive demand and referencing sales ambitions tied to its Blackwell generation and forthcoming Vera Rubin chips. Price outlook. 3 scenarios. All right, here's the price prediction part, but I'm going to do it responsibly. This is not a promise. It's a scenario-based outlook for the next 8 to 12 weeks, using catalysts and key levels, not vibes, not financial advice. Scenario A, bull case, higher probability if headlines cooperate. Range, $200 to $215. What would need to happen? The China/export narrative stabilizes, less uncertainty on H200 logistics, and the market stays risk-on into earnings season, and Nvidia keeps landing real economy AI headlines like the Lilly partnership. Scenario B, base case, most realistic if noise continues. Range, $175 to $200. What would need to happen? Mixed headlines continue. Good demand but geopolitical friction, and NVDA chops around while investors wait for the next major catalyst. Scenario C, bear case, if policy shock hits confidence. Range, $155 to $175. What would need to happen? Escalation in restrictions or enforcement that meaningfully disrupts China-linked sales expectations, or a broader market risk-off move that hits high multiple AI leaders first. One key calendar item. Nasdaq lists Nvidia's next earnings date estimate as February 25, 2026, and that's typically a volatility magnet. Thank you for watching, and remember to hit that subscribe for more weekly updates. As always, this content is for educational purposes only and not financial advice.